Chris, you can get started. I wrote this. I don't even really want to call it a course. I just want to call it kind of like an informative session because I believe that we are leaving a lot of people. I don't want to say hanging, but I will say that we're missing a really great market. And I can tell you that when I did the research for this, one of the things that I found was that you can actually, the reverse mortgage actually finances more properties than we thought. I thought it was just single family residences, and it turns out it's not. It does extend to other ones. So that was pretty shocking to me too. So just quick overview, guys. We're just going to go over some market trends, some reverse mortgage fundamentals, a little eligibility and compliance. We will not be going over any case studies. I promise I'm not going to have any questions for you afterwards. um, but just kind of like the demographic for the home ownership now in this day and age. We're going to identify some eligibilities. I call it reverse mortgage. I guess that's because I'm as young as I look, I'm old school. But Heckham is what they call it. You probably heard the term Heckham. I'm gonna talk a little bit about how the loan proceeds are calculated. I don't want to dig in the weeds too much with this. This is more of an informative session. I really encourage you to get with your lenders when it comes to calculating the loan amounts and stuff like that, because you need a lot more information than I can give you here. And just talk about some of the responsibilities and the risk, and maybe go through a scenario. So the market as it stands right now, most of the property ownership is held by people that actually fit in this demographic, and they are house rich and they're cash poor. There is over $17 trillion out there in equity that is untapped. And a lot of these people could really use the money, but they don't understand what reverse mortgage is because of all the misconceptions about it. So we're talking about a share of like 78 to 79%. That's the highest home ownership rate. Like they're dominating the overall market by about 44%. Whereas the younger generation is looking at this like, oh, just sell your home, or oh, that is a lot of opportunity for us. But the way I look at it, because I am 51 years old, which means that my aunts, my older cousins, I don't have any grandparents left. That means that there is an opportunity for them to truly age in place, which is what most of them want to do. They don't want to leave their homes. Um, they don't want to, um, you know, live in a facility, whatever have you. They've worked hard for this. They waited years for them not to have a mortgage or not to have that expense anymore. Medicine is going up, and I just really feel like we should really start digging a little bit deeper in the reverse mortgage space. So it gives them an opportunity to get their liquidity without selling. Excuse me, getting over something. So my throat is just really active of food. Mm. So here we go. We're going to help them eliminate payments, boost cash flow, and maintain ownership. That is the whole purpose of this particular slideshow. Eliminate payments, boost their cash flow, but still keep their property. All right, so really quick. Baby boomers represent a very large share of homeownership. Seniors have high equity and very low cash flow. They don't want to sell, but they do want access to the equity that they have inside of their homes. Now, once the reverse mortgage converts home equity into cash, it gives them an opportunity to have no monthly payments. They remain the owner of that property. However, and this kind of reminds me a little bit of the subprime era, but not in a bad way, in a good way. The loan balance does increase over time. Why does the loan balance increase over time? Because, of course, they're using that equity a little bit every month. Repayment occurs when the borrower no longer occupies the home, whether they pass away or whether they end up selling it. Now, how a reverse mortgage differs from a traditional mortgage. The balance does change. The qualification is super different. You've got the defaults. I'm sorry, I have a new computer, so I keep having to look over here from my notes. Borrowers with the forward mortgage, they have a higher risk of default because they can't meet those obligations. We don't have to worry about that with the reverse mortgage because there are no payments. And so the goal of a traditional mortgage is through payoff, whereas the goal of the reverse mortgage is the cash flow that it brings. Now, just like a regular FHA loan, FHA does not actually lend the money, they insure it. And the lenders have to be FHA approved lenders, which is one of the reasons why I said I don't want to touch any of the payments or calculations. I really want you guys to talk to your lenders about that. They have tools they can give you. They have like calculation worksheets that they can give you to give you a way to help calculate and see what that equity and stuff is like. HUD approved counseling is a requirement, and you want them to have that counseling because you don't want to be responsible for what they don't understand, and it has to be by an independent third party, and it's documented inside of your disclosures. Similar to, if I'm not mistaken, I think it's the Home Possible and the Fannie Mae's 95 or 97% loan. You have to have that home counseling. Sometimes you have to have it with FHA so that they understand what the program is about. I am all for approved housing counseling because I don't think that homeowners actually understand what they're getting into when they do purchase their homes. So, what is the acceptable uses of a reverse mortgage? To pay off an existing mortgage balance. So, if there is any type of mortgage balance that is left on that loan, that is left on the house. So, you've got someone that owns a home, they maybe owe 25, 30,000. They've got 200, 300 something $1,000 worth of equity. That mortgage would be paid off. Um, it can be used for home maintenance and repairs. This is huge right here because I live in Marietta, Georgia. There are some parts of Marietta, Georgia that are primarily occupied by older homeowners, and you can see the wear and tear on those homes because they don't have the income that they used to have coming in. And then here is the hot spot: medical expenses. We could spend all day on medical expenses, but I'm not going to. Let's talk about what it is not intended for. It's definitely not intended for that diamond ring that your husband never got you, or that Tiffany bracelet that you wanted a long time ago, or the pearls that you never got. No luxury purchases, no speculative investing, or anything like that. Now, what reverse mortgage is not, it's not free money. It's not a short-term use. It might not be for everyone. And it doesn't really replace financial planning. So that's one of the reasons to me why that counseling session is so very important, because it definitely gives the borrower a strong foundation as to what is going to happen and what the purpose of the reverse mortgage is. So let's talk about what we talked about so far. So it's going to convert equity to cash, and they won't have any monthly payments. And the borrower retains ownership. I know I keep saying that, but in a forward mortgage, remember we're talking about reverse mortgage, in a forward mortgage, there's that qualification process because we're trying to make sure that they're not going to miss any monthly payments. Monthly payments are not an issue here. Loan mechanics and repayments. Loan balance increases over time, and repayment only occurs if they sell, they move, or they pass away. HECM requirements and intent. Demand exists for solutions that allow access to equity without selling. All right. Eligibility basics. So first, the bar has to be 62 or older. It does have to be the primary residence. So no vacation homes, no investment properties, nothing like that. Sufficient equity is required. And the borrower has to maintain the taxes and the insurance. No delinquent federal debt. Anytime you're dealing with a federal loan, we're going to always pull those cavers. And so you definitely want to come back with a clear cavers. All right, my fault, excuse me. All right. So it's going to go by the youngest borrower, and the higher interest rate generally results in lower available proceeds. So this helps why two borrowers with similar homes may qualify for different rates. So I'm sorry, I think I skipped the whole paragraph. So reverse mortgages proceeds are calculated using three factors. So it's three factors that we're using. We're using the age. So if the borrowers are married, the youngest person's age is used. So the youngest person has to be at least 62 years old. um, and the current interest rate for that environment, and then the lesser of the appraised value, sales price, or FHA HECM lending limit. Talk about that a little bit over here. So qualified, sorry. I don't know why it's not coming through. Oh, there it is. Qualification does not equal suitability. So an approval is a checkpoint. It's not the finish line. What does that mean? Pretty much that even if a person qualifies, it doesn't mean that it's actually for them. And this was all inside of everything that I researched, which is why I put it in there. So this must be a really big deal with people kind of going all the way and then kind of like stepping back and saying, no, I don't really think this is for me. So just because someone qualifies, it doesn't necessarily mean that they might go through with it. Once again, I just want to say I was absolutely shocked at all the different properties that were eligible for reverse mortgage, single family, condo, 2 to 4 unit, manufactured homes. Here's the thing, it has to be their primary residence. Now, loan amounts are determined by the age of the youngest person, all right, sorry about that. Reverse mortgage proceeds are calculated using the lesser of the three values. Even if a home appraises above the FHA limit, proceeds are still capped. So this prevents the borrower from accessing unlimited equity and is another consumer protection built in. All right. I thought I had a better one that actually talked about it. And I'm sorry. Hold on one second. Rate impacts access, not affordability. All right, here we go. This is what I was looking for. All right, so here's a reverse mortgage refinance example, because if the person is owning the home, remember it's like a refinance, and they do purchases, and I can't remember if my next slide actually shows it. So the home value is 300,000. The loan amount is the allowed the loan amount will be about 200. The closing costs would be 6,000, and the available loan proceeds will be 194,000. If the borrower owns 30,000, that gives them 164,000. So I don't want to go any further. I want you guys to do you guys understand this slide? Because I think I confused you guys when I was looking at the other two slides and kept explaining that.
I do have a question.
Yeah.
So if they have a current mortgage, that gets paid off when they do this reverse mortgage?
Yes, this right
Always?
here.
Okay. Thank you.
No problem. I haven't seen this slideshow in a minute. I'm sorry. I just kept saying, I know I had something that showed me an image of this. All right. So a reverse mortgage for a purchase. So the home price is 300,000. The closing cost is 4,000. The down payment is 175, and then the HECM loan amount is 129,000. I thought this was very, very interesting. Um, if I had to give an example of what this would probably be good for, only thing I can really think of is if someone wants a more updated house, a smaller house, and they want to use their proceeds of their existing home to purchase a smaller house and not have payments. That would be the example that actually comes to my head. So it can be used for refinance and it can be used for purchase. And I see a lot of these CE classes with the real estate agents. So this right here was kind of like my aha moment when I was like, okay, this is what they're talking to the real estate agents about. They're selling their homes, they're probably getting smaller homes, and they don't want payments. And if you have the equity of the money to do so, why not? All right, reverse mortgage payment options. So here are the payment options: fixed payments, a single lump distribution, or fixed payments for for a specified term, or a flexible line of credit. Those are the options that you have. So I'm going to give you a little bit of vertigo. I'm going to go back. So the net proceeds of that 164,000 or that 129,000, you can have fixed payments for the next however long, single lump distribution, fixed payments for a specified term, or a flexible line of credit. AJ, you came off mute. Did you have a question?
Sorry, I'm trying to mute.
Oh, it's okay. I can see it in the corner of my eye. So important tax considerations. I'm not a CPA. These are all guidelines. Loan proceeds are usually taxable, interest deductible upon repayment, and funds may affect eligibility. And what do they mean by funds may affect eligibility? Loan proceeds are generally not considered taxable. Interest is typically deductible only when the loan is prepaid, and funds may affect eligibility for certain need-based programs. So need-based programs, I guess there are certain, income programs that you have where if you receive a certain amount of money a month, you probably get less money or something like that. So something else they'll take into consideration, something else they're probably going to discuss with them when they talk to them in counseling. Suitability is not qualification alone. Approval is not the goal. Stability is. Everything that I read inside of the guidelines for this was all about not, I want to word this carefully. So normally the goal is, you go out and you get business and you convince the borrower this is the best program for them. And, you got to close, close, close. One of the things that reverse mortgage or HECM, the guidelines, just kind of like kept going on and on about is just because they're approved doesn't mean that they should do it. And I take that to mean that we're not trying to sell them the HECM reverse mortgage product. We're trying to offer them an option or a solution for a problem. So just something to keep in mind. So borrower responsibilities. Loan prepayment only occurs if the borrower passes away, they sell the house, or they cease to occupy that house for 12 consecutive months. Now, to my understanding, this is just what I've read. I don't know how true, I don't know how often there are checks. I don't know how that goes. I don't even know if that's something they would actually publish, because if you tell them how you're going to do it, they'll try and, circumvent it. I don't know. But pass away, sells the home, or they're not living there for 12 months. Repayment amount. Balance includes interest and fees. Sales proceeds are used to repay the loan, and the remaining equity goes to the borrower, or of course, if the borrower is not alive, it goes to their people. Repayment acceleration conditions. Required payers are not completed. Taxes, insurance, or condemnation. Eminent domain action taken. It's no longer the primary residence. Bar and air protection. I thought this was really cool. Lender cannot force them to move. Lender can't force them to sell the house. They do have 12 months allowed for repayment, and the loan is no recourse. I thought this right here was super, super cool. Um, and the loan non-recourse basically means that they cannot owe more than the property is worth. But back to 12 months, I thought this was really cool because another reason why people kind of like shy away from the reverse mortgage is because their whole thought process is, well, as soon as my, parent or whatever have you, a relative passes away, we got to pay this money back right away. Well, it's not. They actually have 12 months to repay that loan. So, compliance focus, explain maturity acceleration, provide accurate and clear disclosures, avoid free money language, document understanding, and counseling. I'm going to stop sharing my screen. I'm so glad that we recorded this. I know that was a lot of information, but I just want to go back on record saying that I did not write this to help you guys qualify for a reverse mortgage. I really wanted to make it more attractive because I actually have relatives that have asked me about this mortgage. And it's been a long time since I've actually been on the sales side. We're talking to salespeople. And I just thought that this would have already been something that somebody would have already talked to them about because they have so much equity in their property. But they have no idea what a reverse mortgage is or how it qualifies. They just seen, what do you call it, commercials on TV. So I hope that this presentation, that this slideshow encourages you to talk to other people about it. Michelle.
I once sat through a little presentation from a lender about reverse mortgages. And one thing they said, but maybe it was allowed a few years back and not allowed anymore, but they were talking about how you can use a reverse mortgage if you qualify by age and equity, etc., to get funds to invest in investment property instead of
So
having cash down payment. They were saying, go ahead and use this excellent program. And when you die, your children worry about it. But they said that was allowable. A couple years ago, they said that. So
I
is
am,
that
I am, I'm not going to touch that because everything that I read was about it not being for investment purposes and for it being for repair, medical expenses, or to supplement your income. Now, I will go out on a limb and say if you feel like taking whatever money you have left over and buying a piece of property is something that you do, we can't tell you what to do with, your money, but I definitely wouldn't sell it like that.
yeah. Okay. And then the other part is, can it be used for regular living expenses? Like they're short on cash because maybe their pension, they outlived the pension.
Absolutely.
Okay.
Absolutely. That very thing is what it's for. Um, I've been talking to my aunt about it because she um she's up there. She has a lot of equity. And I just want her to know what her options are. It's a really great program. This is a very short version of a CE course that I wrote for FAMP, Florida Association of Mortgage Professionals. Um, but when I was researching it, I was like, I do not understand why more people are not pushing awareness. And notice I said awareness. I'm not talking about the program. I'm talking about pushing awareness of this program because the very thing that you hear older people talk about, myself included, is the cost of medication. Seven, $800, $1,000 a month. This is a great way to cover those expenses and still live a comfortable life without having, to go get a part-time job as a greeter at Walmart. Use your equity.
Yeah. Thank
I,
you.
I have a question. Um, So I think it's a really great program too, and it makes a lot of sense for people that want to stay in their home and they just can't afford it. But if there's a downturn in the real estate market, it's my understanding that if their house is worth less than what their net proceeds were, they don't have to pay back any deficit on that. So
They do not put them in debt like that. Yes.
yeah, okay. They only lend you so much that to cover that. Okay.
Yes.
And I heard the closing costs are a little bit expensive, but it didn't seem that expensive when you were showing that on the purchase and on the refinance.
I'm my honest opinion, Kelly. I think it depends on the person because the closing costs are going to be based on what they want to make off of it. I mean, if maybe the title fees might be a little bit higher because they might have to add some extra deeds and stuff for like the heirs or whatever have you. But I
Yeah.
didn't read anything about the closing costs being a little bit higher at all.
And I hear the biggest obstacle are their heirs. Like they're eating up all my equity, and I don't want my parents to do that because when they pass, I want to have all that money come to me. And so I hear the kids talk the parents out of it.
Yeah, yeah, I hear that too. But it's funny
That's a
because
good.
these same kids are not buying the medication to supplementing the parents' income.
Yeah, and property taxes are expensive too, like in certain states. And if you did a basic home equity loan, then you're making monthly payments after it. It really is, I think, like you said, a really good program. And I used to see more commercials on TV about it, but I haven't seen anything in a long time.
My aunt has a 3 unit building in Chicago, $25,000 a year in property taxes.
That's crazy.
Yeah, that's like a second mortgage itself. It's ridiculous.
Yeah.
My cousin actually is going through this right now, because her father, my uncle, just passed away, and she's the executor and heir to the home. And so I do know for a fact they give 12 months from the date of death without payment. But of course, that's all tacked on at the time that she's going to close. But there is that grace for those heirs, and who cares what your children say about you afterwards anyway, because you're not there to hear it. But I think that, along the line, it really helped my uncle and my aunt when she was alive to get through medical issues. And then, like I said, he outlived his pension as well. So there was that as well. But it is an excellent product for the right people.
I do want to say this. I know I got to get off in 2 minutes. Um, I don't remember if I saw it just maybe like when I was kind of like doing searches or stuff, but a lot of people were saying that you get insurance to match whatever the equity is that you're taking out so that they could use it to pay off the mortgage or whatever have you. Like I guess like a life insurance policy or something like that because you've got the funds now, whatever have you. But I just saw so many different ways that it could just be helpful. Like if I was an originator, I would probably dive head into this product. I would, because number one, I hate selling. So here is something I'm not selling. Here is something that I'm just informing people about. No
Thank
problem,
you.
Chris.
Thank you.
No problem. All right. Well, thank you guys so much. That was my first time teaching it live. Um, we got it approved through the NMLS, but I haven't taught it live. I'll be teaching it live at FAMP in August. So I see I need to do a little bit more research to make sure that I'm on my P's and Q's. I'm gonna come back and watch this video.
You can practice on us anytime you want.
I
There you
appreciate
go.
it. I appreciate it.
We appreciate
Thank you
your
so much.
generosity of your time.
No problem. I can't remember what we're doing for second quarter, Chris. So please, 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 please do as you always do and remind me to
I
send
will.
you a subject.
I will. And we need to get your speaker agreement signed too
See,
for
this is why I
conference,
love you. Thank you. I will
for
get
the
that to you
convention.
too.
Thank you so
All
much.
right, we good. You guys take care.
Thank you, everybody, for
Bye-bye.
Thank
getting
you.
on.
Thank you.
Thank you.
Huh. Oh,